Jenny, welcome to the show and good morning to you.
Good morning to you both, Alex. I think that could be one of the best introductions ever. I would love to be the in-house Lululemon expert. My gosh, it's a company that I think people love. Like you just mentioned the way we all love it. People love it so loyally and so deeply. And I think that also is reflected in the fact that there's very clear bears and bulls in this name, similar to a Tesla. So we saw that really after their second quarter results when they got kind of punished for not posting or meeting these high expectations. I mean, they posted a beat on top and bottom line. They guided higher for the second half of 2020, but the stock had run up 70% this year going into the second quarter earnings, and they just couldn't possibly meet these super high expectations. But I think it's super important to note the fact that revenue still grew in second quarter year over year, despite the fact that the majority of their stores were closed. So that just shows their resiliency, how well their e-commerce is doing, and their DTC segment really grew. So this name is, got punished after second quarter earnings, but maybe it necessarily wasn't justified. But, I really like to compare this name to, a Nike and Adidas and Under Armour, other athleisure names with a very loyal fan base. However, I was looking at a yearly chart today of Apple compared to Lulu, and I saw some really interesting parallels in the price activity because they both have this very loyal consumer. As you can see in the last year or even 2 years, they've seen a lot of the same activity. And I think this is because both names have these high price points. I mean, you pay over $1,000 for an Apple iPhone, you pay over $100 for a pair of Lululemon yoga pants. However, the fact is we keep going back. I mean, I have an Apple iPhone, a watch, a Mac. It's a whole ecosystem now. And I'm just so loyal to that Apple, logo. Lululemon is the same way, where I would argue the fact that they have some of the most functional, aesthetically pleasing, and durable athletic apparel. So I keep buying at this high price point, and I think I'm not alone, especially due to the fact that we've all been home, and athleisure has been, in my personal opinion, the number one thing I've been wearing. Another thing that Lulu is also doing is they're devoting more square footage to building out their stores to have now these gyms and these cafes. The Chicago location last year launched a membership, so you could go and be part of this community. So they're really focused on expanding outside of just being, I believe, a retailer. Another thing is they're devoting more square footage to men's apparel. So they're hoping to double the revenue of that segment by 2023. And they're also looking to expand their square footage in China at a 40% compound annual growth rate through 2024. So I believe the men's segment and the international segment are the two areas of growth to really watch. And those are the areas where I think this company can really continue to be one of the winning retailers. But to look at some of this price activity, that brings me to our first tweet, which talks about how the stock has been on kind of a run, but then fell a little bit after the second quarter. So our first tweet says, I was so close to pulling the trigger on buying Lulu after earnings at 300. Missed it. I cringed as the stock ran up from 300 to 330 to 360 to 399. Ugh. Now I'm thrilled to pick up shares at 295. Thank you very much. Lulu is the Tesla of clothing, cult-like following. So a tweet near and dear to my heart. I completely agree there's this cult-like following because unfortunately I'm part of it, and Lulu takes far too much of my money. But this reversal this tweet talks about is interesting, and it could possibly offer a point that maybe Lulu shares are on sale right now. It's a more attractive price point. You all are the experts in that category, but I do think the fact that it has fallen a little bit since its 70% run up is a good thing for traders. But our next tweet talks a little bit more about what's happening with Lulu going forward and some of their mergers and acquisitions. So our next tweet says, Lulu is the only retail brand I care to own. I passed at the March bottom, and after the Mirror acquisition, got tired of passing. So the Mirror is an exercise streaming device. It's on demand, similar to a Peloton, but not a bike. It's just a freestanding mirror. So, Kevin, my question to you is, the more Lulu say they have this Mirror acquisition, they're now building out some of their stores to have gym memberships. Do you think Lulu wants to become more of a Peloton, less of, say, a Nike?
Lululemon is trying to just nail down their ecosystem and get you to come into the Lululemon world. And think about it, Jen. I'm going to call you Jen for the rest of this segment because you're talking about Lulu. So I think there's a alter ego that should be Jen from now on. What do you think? So
I'll take it.
I think, imagine a scenario, Jenny Horn, where you would go to a class at a Lululemon and wear something other than Lululemon. That just simply wouldn't happen, right? I think they're promoting this customer loyalty and this overall ecosystem of healthy living and taking care of your body, and they're making it their brand, and they're winning at doing it. That being said, the stock still went from $399 to about $295 in the last month. So that is just the difference between the quality of the company can't be argued, but at some point I want to be short the stock, and some point I want to be long the stock. And that move was pretty vicious for a lot of people, basically dropping a little over $100. So the quality of Lululemon and the experience that they're creating can't be argued. That doesn't mean I always want to be long their stock. So it's two different things, guys.
No, I think you guys both highlight so many of the things about Lululemon. The only thing I could even think to add is it's a discretionary name. So it's going to be cyclically tied to some extent. If people have less money to spend, they're going to have less money to spend at Lululemon. And I think the idea of the ecosystem, Kevin, is an important one. So we'll see how things shape up. Jenny Horn, always a pleasure. Thanks for joining us. As we say goodbye to Jenny, we want to welcome in Landon Swan, the co-founder of LikeFolio.com, to join the conversation here. Landon, my biggest question is, and then I'm sure you have ideas just because of all the different companies that you're tracking here. I think Jenny brings up an interesting point. What does Lululemon want to be? They're a powerhouse now, at least for now, in the apparel space, but they're expanding rapidly into other things. To Kevin's point, an ecosystem's expanding. But what do you see from what you're tracking and the other companies you track? What does Lululemon remind you of, if anything?
It's got a little bit of Apple to it, honestly. The ecosystem approach where, Jenny talked about making the stores more fun and more interactive and doing things in the stores. Now they've bought the Mirror brand, which, by the way, don't sleep on that. That was, I think that was about 1% of their market cap as far as cost, and it's adding about 2.5% to their revenue. So good play by them. And if you look at the timing of that, it only took them about 3 months to make that acquisition after the quarantine started, and they saw the trend of people working out at home. So I think that says a lot about the management's ability to adapt and really take advantage of shifting trends in consumers. So big plus for that one on the management team. I think that's a good move. But it's an ecosystem. The only thing that kind of gives me pause, first of all, the stock price got up to about 400. At that time, our LikeFolio data was actually pulling back really hard. I pulled in a chart today for going back to 2012 because I wanted you guys to see the green line. Here's our purchase intent, it's a 90-day moving average. And while you can see it's a little bit seasonal, there was a very steady uptrend for the last 8 years. And then all of a sudden, with COVID and everything, there's a little bit of bump initially, but there's been a massive pullback. This is, if you were reading a stock chart, you would say that it broke support, right? We're down at very low levels, back to levels we haven't seen since 2017 on purchase intent. So concerned on consumer enthusiasm of the brand right now, even though I love Lulu. I've got a ton of their products. But I am concerned with just what our data is saying as far as how many consumers are spending. So short term, I think maybe the stock could pull back even more. Definitely was looking for a pullback at 400 based on our data, but now even where it's at, I would say it's due to come down a little bit. Long term, I think I love the brand. I love what they're doing, and I love the fact that they acquired Mirror, and I think that's going to fit really well with their customer base. So I'm not betting against them long term. I just think they're a little rich, even still here.
Landon, I'm going to bring in something that Alex said and something that we learned this morning on some of the economic data, and wonder if that has something to do with Lululemon's, customer purchase intent. And that is, Lululemon's a consumer discretionary, right? Remember what that definition is of a consumer discretionary. That being said, we got a data point out today, personal income down 2.7%, right? You can probably connect the dots between paying for the highest priced yoga athletic wear and overall income in this country going down. And maybe you're starting to see the effects of some of the stimulus not coming in to to consumers' pockets and a little trail off. That being said, Lululemon at $400 clearly was a little overdone on the upside. Did people think it would get down to $295? Probably not, but it went down to $295 fairly quickly after their earnings report, guys.
Kevin, I want to jump in here, but Landon, building on that question to you, tying this to your data, I think you summed up your kind of outlook on Lululemon so well. I don't need to follow up there, but building exactly on what Kevin's talking about, is there potentially a further read through when you have a strong brand that we know, I believe, at least, I mean, you haven't said it, but their consumer happiness, I believe, has stayed the same. The enthusiasm maybe around the brand has waned simply because there's less money to buy their products, not because people like the products less. So when you see these market leaders in a particular space starting to weaken, is that telling us something? Is that flashing an early warning sign that things aren't as nice as they seem maybe for the economy?
Yeah, I think it could be. I mean, you got to look back, and you remember there was extended unemployment benefits where people were getting an extra, I think it was $600 a week. Everyone got a, what was it, $1,200 check or something like that, stimulus. So there's been a lot of money pumped into the economy, and I think a lot of that has run out now. And so just like Kevin was talking about, when you're thinking about buying clothing, are you going to look at the clothing, the pants that are $50 or the ones that are $150? And yeah, Lulu makes a great product. Happiness is extremely high. They have a very loyal customer base, but if the money's not in the bank account, consumers aren't going to spend it. And so I'm a little concerned with that. Plus the fact that they are doing a great job reaching out, obviously, to adding men. They're doing a lot of things with their brand, the Mirror product. But primarily, this is either a athleisure, comfort wear, or yoga wear. And you got to know that yoga is, it's down a little bit right now because of the quarantine. A lot of studios are closed, and a lot of people don't want to go because some of them are making you wear masks while you work out. And it's just not something people want to do. So you're going to buy less of the type of things that help you with yoga. So yoga mats and clothing like Lulu creates. And so I think that's, again, I've said this a lot. All these companies need the economy to open back up fully in order to really hit on all cylinders. But their defensive buy of Mirror, which I think was really, really smart, is going to help them. And they're projecting that to be $100 million in revenue. They do about $4 billion total as a company. So it's a very small percentage, but that could increase over time as they start putting those in all their stores, and that could really be a great synergy with their customers. So I'm worried because of the economy. I'm worried because of the purchase intent being down. Long term, I love the company, but again, I wouldn't be surprised if we pull back a little bit from here.